And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It is another Friday morning, and yes, as promised, we were going to go over those jobs numbers today. And I don't have any exciting news for you. It just seems to be bad news. The bad news bears are out, and yeah, the Japanese prime minister got murdered, apparently assassinated today. And Bitcoin is bouncing off of some of our downside targets. I don't know if we spoke about yesterday, but they were certainly in my mind here. And we got about 25 minutes left on this candle. So what am I looking at on the 15-minute time frame? We did get a short-term pullback off the bullish control zone. And are we going to be putting any divergences in? And yes, we will on the 15-minute time frame if we cannot get closure back above 22,100. So what am I looking at here? First, golden cross on the 15-minute. See right there, and volatility is getting hot, and momentum is to the upside. So we will have several drives of bearish divergence coming from this point right here, if we can confirm this as a local high on the next closure. I don't know where that comes in, but I am more bullishly biased. We did get the pullback overnight, so we hit a target. I'm just going to revisit what we spoke about the other day, and we said, yeah, any kind of a 4-hour closure above 20,500 very likely would give us the next momentous move up to 22,500. We got that move up to the purple 200 exponential. And then we had a confirmation of a couple drives of bearish divergence. And that gave us a shot back down to 21,200. And here's what I am just going to bring up here, this little supply zone here. And if we can close this 4-hour back above 21,867. This is the supply line where essentially the suppliers dump it on the buyers' faces. And if we can get back above that, and essentially we broke above and then we tested it as support here, and this is what's called a bullish engulfing candle. I'm looking for this move to continue onwards and upwards in the higher term time frames on the 5-day. And that's a move up to somewhere around 24,000 in that range, just to put it simply there. So what else do we got on the daily time frame here? Yeah, I mean, if this does confirm as a local high, and it will be invalidated with any kind of a daily closure back below 21,200, and that would give us a move back to the bottom side of the range at 19,200. Somewhere in that range, somewhere between 18.7 and in that range. So just to clear this up a little bit here, there's a lot of lines on the chart. On our 3-hour time frame, wow, just really lifting off here. And yep, that is not looking too good for the shorts out there. So shorts are getting killed, and yeah, I'm going to put out a macro video later. Why, again, this is just a corrective bounce on the daily time frame on CME. Something we have been going over as well is when volatility begins to contract, we typically see about a 30% bounce from the bottom to the next high. And what would a 30% bounce look like? 30% gets us up to right there, the top of the blue box right there at 24,690. What else that I want to bring up here? So now volatility is beginning to expand as momentum is heading to the upside. So we already got a 20% move. Could we get rejected at the 21 here? Yes, very, very possible. But I do think it's more likely than not for us to play out a bit of a bigger bounce. Why is that? Well, we had quite a bit of a big downside move. So the corrective bounce is going to be higher than average. The average corrective bounce is about 30% as volatility contracts. So I do believe that that move up to about 23 to 24,000 is in the cards at a minimum. Best case scenario up to the green 55 at 27.9 currently right now. And that will be steadily be coming down over the next few days as this is a moving average. And you can see on every daily closure, we're slightly just coming down more and more and more. What else did I want to bring up? So yeah, corrective bounce and Stokes crossing up from a low level here as well. Definitely going to give you a move. And then the last thing would be the hidden bullish divergence, or is it just regular bullish divergence? Yep. So what is bullish divergence? When the price is making lower lows and the RSI is making higher lows. What is hidden bullish divergence? When the price is making higher lows and the RSI is making lower lows. So hidden bullish divergence is, yeah, coming back from this point right here, and we have 1, 2, 3. Yep. Price is making significantly, so that would be 1, 2, 3, 4, 5. I mean, that might just get us a shot up into this green area right there. Yep, that surely could get us a move in. We did talk about this gap getting filled here. This gap did get filled almost to the T right here. And those gaps like to get filled. And we talked about this gap getting filled and this gap getting filled. And where's the next gap? Where is the next gap on the totem pole here? And I'm going to put out a macro video a bit later today, hopefully, that talks really about kind of stock market cycles going back to 1929 and the Great Depression. And we did talk about the jobs report coming out today. And yes, U.S. unemployment is unchanged from last month, coming in at 3.6%. I don't know exactly where it was, but that is the headline coming in from, oh yeah, no. Anyways, this is the official report. I'll leave a link in the description below. Yeah, total non-farm payroll employees rose by 372,000 in June, and the unemployment rate remained at 3.6%. So the estimated number, total non-farm payroll employment, we expected it to rise by 265,000. It came in way over at 372,000. Then the unemployment rate remained the same at 3.6%. And the other major piece of news that we're talking about, we expected the hourly growth, wage growth to come in at 0.3%, which would have been great for workers and bad for the stock market. On the other hand, it came in at 0.1% wage gains. And so 0.1% is better for the stock market and essentially worse for workers. Wage growth was a little bit off from that month. And so what would I say here? A thing to keep an eye on is essentially is this factor, is that because those numbers came out better than expected, it gives the Fed the ability to say, hey, we can be a little bit more hawkish in the following month. And remember, August is a no month for the Fed meetings. Oh, that early morning wake up today at 3 a.m. is coming in, I guess, right now after the gym and the workout. And yep, that's about it for today, guys. So yeah, keep in mind, we're still having massive layoffs in the tech sector. Tesla's coming out with layoffs, Amazon, GameStop, Microsoft, Coinbase, all these big tech companies laying people off, yet we still had the unemployment stay the same at 3.6%, and the payroll increased higher than expected. So again, that might give the Fed the ability to come in a little bit more hawkish. Who knows what inflation will run here in December. Not in December, in August, and then we'll come back in July. And I believe at the end of the month, the official CPI data will come out. So we'll be on a lookout for that. But again, I am expecting something like this, for Bitcoin to do a little bit, to do one of these, and that would be something like this. I would draw it out, right? So we get a bounce, a 30% bounce, come back down, and maybe if we put in another lower high, that would look good for a move like that. However, I just don't think that that'll be the case. Only time will tell. And again, 5-day, we did say any kind of a tick above here would give us a move up to the 9 exponential, and this will come down, probably around here, about 25,014 on the next 5-day closure in 3 days and 6 hours. What else do we have? The weekly time frame coming in here, and this is CMEs again, so this will probably come down slightly. Let's see, how far did we move down? Yeah, that was a big, that easily moves down right here. Target at 24.7, 24,730. What does it look like on spot price action? And let's just take a look at if this lines up with any fib targets, right? So if we can line this up with some fib targets, trend lines, and give us a bias for kind of where to be looking for that next big short on Bitcoin, I think it's going to be a nice one. In fact, the trend will be your friend till the end of the trend. And what is that? That's the 0.5 coming in at 25,000 right there. And that is typically where you'll see those bull traps come in at the 0.5. And we've been away from the 9 exponential for some time. And I don't think we have enough juice to get up there. And let's just take a look real quick at open interest. What is open interest coming in at? Open interest. Let's take a look. Sign in. Remember, when open interest gets above, 13 billion, that's typically when we get the next big correction. Open interest at 8.5 billion, so still relatively low. And as open interest does increase, and we're getting a bit of a bounce, you'd expect price to kind of head upwards. Open interest is, currently sitting at about 8.5 billion. We want to see it get up to somewhere around 12 to 13 billion. That usually does it. 12 to 14, and then we get that big correction. So last time it was 12. About 12 billion, and we got the big correction. We will see, and that probably does line up with a little bit of a trend line here for open interest. You can see coming back all the way from this guy. Our open interest is only 4 billion here, 5 billion, and I'm looking at the lows here, and 7 billion. So steadily increasing those higher lows, and we do have some lower lows and lower highs right there on the other side. All right, that's it for today, guys. That is it for today. And this, how would I invalidate that move to the upside? Again, we got a 4-hour closing here shortly with a bullish engulfing candle. This is a bullish continuation candle with a volume in the next 11 minutes and 46 seconds. So any kind of a closure, really, on the 15-minute, what would cross the Stokes down below 21,909? So we get a 15-minute closure with Stokes coming down, rejecting the bullish control zone with a drive of bearish divergence. But this isn't confirmed as a local high yet. So could we be looking at a bit of a backfill? Momentum cross to the upside, and we do not have any. Do we have any drives of bullish or bearish divergence? So price is making higher lows, 1, 2, and RSI is making lower lows. So we go based off the 3 drive philosophy, And that would technically, on the bullish side, nope, we don't have the 3 drives. We got 2 drives. 1, 2, and that might not even be considered a low. This is the first low. So what can happen here? We want to see 3 drives, even on an hourly, right? So, and that would be bearish divergence. The 2 drive variety should get us a move back to the bottom side if we confirm this as a local low. So, again, maybe we do something like this. Let's play guess. The guessing game. All right, we're 15 minutes into this video. I know I'm boring you guys to death here, but let's play the guessing game, right? So we are here in the supply line, right here, right in the middle, smack dab in the middle of it. And that's coming back from a ways away ago. But let's say this is your first local low. So what do we need? Another higher high in price. Yeah, that doesn't even look like a low either. So going back from here, it still would give you 1, 2 drives. So is that a higher high? Is it a closing basis higher high? Well, we got 9 minutes left on this candle, and that's not a confirmed high. We are getting quite a bit of volume, so I would say continuation off the next drive on this hourly time frame. The 30-minute, putting in a bit of a gravestone or a shooting star candle with some volume on the 30 minutes. So maybe reversal. That is depends on how it closes. Could be a reversal candle there. And then on the 15-minute, if we do close anywhere below, really 21,626, I'd be looking for a move back to the bottom side of the range. So we got the 3 drives of bullish divergence on the 15-minute, and that did give us the shot to the top side of the range. So are we going to get the 3 drives of, bearish divergence, which would be coming back, from here. So 1, 2, 3. So RSI is making lower lows and price is making higher lows, and that should get us a move back to the bottom side of the range, which is what we need to get the other drive of bullish divergence. So do we do something like this, right? Higher high, higher low, higher high, higher low. If we see something like that, of the 3 drive variety, that would look good for the next kind of major move up, and that would be at 23.3. So just something to be aware of as momentum is crossing back to the upside on the hourly time frame. If you don't have Bitcoin in your Roth IRA, all right, it's really simple. It's a tax-deferred, penalty-free rollover. You go right from a traditional investment like stocks or bonds or mutual funds, and you can roll it into a Bitcoin IRA. So if you do believe in the long-term picture for Bitcoin and cryptocurrencies, why not put it in a Roth IRA where it will grow tax-free? It makes 0 sense to have it on an exchange when you can put it on our platform at Kingdom Trust, which is 100% insured by Lloyd's of London, the oldest insurance company in the world. So you don't have to worry about it going bust like all these exchanges are going bust. It's exchange bust free, and then it will grow, because we all know, I think we all think Bitcoin at least hits $250,000 during the next bull run. And if we're at 20,000 right now and it goes to $250,000, that is a 10x on your money at a minimum. And I'd say that's fairly conservative, something to look at over the next 3 to 5 years. And that's why I'm a firm believer. And again, this isn't financial advice. I'm not a financial advisor. We're just talking about magic internet money here. Magic internet money, it's not even a real thing, right? But hope you guys all have a blessed and highly favored day, and we will talk to you soon. Take care.